I'm Mark Laudi, welcoming you to the official book launch of our book by Marshall Cavendish, Let the Cash Flow. In the next hour or so, we'll be talking about payment delays, and in particular, how we're calling for an end to payment delays just at a time when particularly small and medium enterprises need all the cash flow that they can get. Payment delays isn't just by large companies. Most companies try to manage their cash. And in the next hour, we'll be fleshing out the 3 initiatives that we have planned to make sure that SME suppliers in particular get their invoices paid on time. First, of course, we're going to be reflecting on this brand new book published by Marshall Cavendish, Let the Cash Flow. But we'll also be walking you through the RIABU portal. RIABU.com is the portal that helps you put into practice all of the things that we talk about in the book. And third, we'll be reflecting on Pledge to Pay. This was a campaign we ran in Singapore last year and are now going global with. More details to come in the next hour. And of course, we're also very welcoming of your input, your questions, your comments, any observations. Maybe you even have your own story of delayed payments. We're very happy to take those through the Q&A function here on the Zoom portal. So, Simon Littlewood, it's the beginning. It's the end of the beginning, as we were saying a few moments ago. Having put this book together, clearly, if you have published a book yourself, you'll know just how much effort is involved. And Simon, job well done on getting Let the Cash Flow together. 50,000
words and 120 illustrations. Fantastic.
Yes.
And we called it Let the Cash Flow. And I'll explain in a minute why we called it that. But first of all, I'm calling out to anyone who's struggling with getting paid by their customers, large company, small company. The fact is that this is a perennial problem for all companies everywhere in the world, and it's getting particularly bad at the moment. And I'll talk in a minute about why it's likely to get worse this year. But before I do, let me talk about why we call this Let the Cash Flow. Why let? Why not get the cash to flow? Well, because the fact of the matter is that if your cash is not coming in, it's because of something you are not doing or should be doing differently. In other words, it's up to you to do something different so that you can let the cash come in.
Isn't it the customer's fault, Simon?
Well, that's what a lot of people say. But the reality is that when things work properly, it's because you manage things in such a way that the customer has no choice but to pay you on time, and all of that's laid out in this book. So let me just explain to you briefly what's in the book and how it can benefit you. So if we move to the cover. So the cover of the book, we talk about the fact that every company has customers who are paying and customers who aren't paying. If they're not paying, the sooner you deal with that and stop doing business with them, the better. But for those that can afford to pay you and are paying somebody, the key thing is to be sure that you are first in line to get paid. In other words, if they're liquid and they're paying someone, why are they paying someone else and not you? Well, the answer is there are a whole range of things that you're doing that let them pay you late. It's not an adverse fate. It's not the government. It's not the weather. It's not global warming. It's unfortunately the fact that there is something that you could or should do differently. And we go into great detail into how you can do things differently. So just a word on what's top of mind for executives. Interestingly, many of you already know that the main reason that companies go bust, sadly, is because they run out of cash, not because they run out of ideas. And in somewhere like Singapore, where I have the pleasure to sit and have been sitting for 30 years, this is an absolute hotbed of innovation. Entrepreneurs are constantly coming up with new ideas and creating fintechs and so on and so forth. Where they fail, it's mostly not because of a lack of customers, it's because of a lack of cash. Because the reality is that a successful business growing fast typically needs more cash. And in a recent survey, 66% of executives said that the most pressing concern for them was cash flow. Interesting survey just out, and I don't want to cause alarm, but the reality is that Singapore will have the 3rd highest rate of growth in bankruptcy in 2021 of all the countries in the world. That's after Australia and France. The astute among you will recognize that part of the reason that those 3 companies are at the top of the list is because each of those countries has been putting a lot of money into supporting industry. And what that's done is it's kept a lot of dead men walking in 2020, companies that are actually basically illiquid. So those companies have stayed in business, and many companies in 2021, as the government help is withdrawn, are likely to find themselves filing for bankruptcy. But since we now have a bit of a window of opportunity, at least until September, look at the book, understand what's in it, and use this opportunity to manage your cash flow so that insolvency does not occur. So just a reflection on the fact that we have had global challenges before. The last really big one, the one that I remember that I was in Singapore for, was 2007. There was a big crisis, and it's interesting. There's a survey which I share with you now, which talks about leading companies and about the difference between companies that took balance sheet and cash flow seriously at the time of the crisis, and how 13% of them significantly grew their market value as a result of that focus on discipline and cash flow. So I'm urging companies now of all shapes and sizes to take a look at what's in this book and to do everything you can to remove the obstacles to prompt payment. So the book has 8 themes. In addition to talking a lot about what people that have worked our methodology have learned through the voices of 3 very experienced businessmen of very different backgrounds, but who have all learned that by putting into place what we call the virtuous revenue cycle, which has 8 components. 8? How many is that? 8, okay. By putting in place those 8 components, they have been able to significantly change their situation with regard to cash flow. And the one thing that all of them say, and this is right at the top, is at 12 o'clock, if a cycle can have a 12 o'clock, is top-down ownership. That is, if you're in a business where somebody's worrying about receivables, but it's not the leader of the business, then you're very unlikely to be able to sort the issues out, because the changes in attitude and behavior that are required to set yourself up for prompt payment start at the top. So top-down leadership. And if you read the book, well, we've got some very good and compelling case studies of how leaders have put their arms around this and changed their internal culture, as well as practical advice as to how you can cascade these attitudes through the company. The second thing, and I'm not going to go on about all 8 because it's too complicated. And also,
read the book.
I want you to buy the book because it's all in here, including good advice on how to do it, templates for doing it within your company, and so on. Yeah. The second thing is, rather obviously, having a clear credit policy. And I say it's obvious, but it's just amazing to me how many companies I talk to for whom the question of getting paid on time is really an afterthought. And we do write about this quite extensively. That is, I'm focused on finding my customers, giving them the value that they can get from my good or my service. And I'm proud of the service, the capability that I've created. But you see, if I don't include in that early conversation my expectations in terms of not just price and timeliness and quality, but also when I'm going to get paid, and ensure that that becomes a mutually agreed expectation, then it's very likely that I'm going to find myself fighting an entirely reactive battle when payment is already late. And indeed, one of the things that constantly amazes us, if you Google anything to do with receivables, accounts receivable, money owed you by customers, you'll get lawyers, debt collectors, all sorts of dubious services, which are going to cost you a lot of money, but they all have one thing in common, which is it's too late. Okay, they're all to do with stuff that you do when payment is already late. So what we talk about in this book is the need to change your relationship with customers so that expectations are not just shared, but are firmly agreed early on in relationships. And the need to do that is understood throughout your organization, that you use specific tools and training to ensure that above all, your commercial team understands the importance of baking payment terms clarity into everything that you do. And as you progressively learn to do that, starting with your most important customers, and then you also work on taking away the issues that prevent or let your customers pay you late, because people by and large are honest. What they do is they take the opportunities that you give them and they use those opportunities to find a few days here or there take away those opportunities by closing every one of those doors that you've left open. So when you go through the processes that we've enjoined in the book, you'll see that there's a way to define what will happen with your working capital if you do nothing. It's a very important place to start. Rather than starting with today and saying, well, one way or another, it's going to get better, look realistically at what your performance has been over the last few quarters or even the last couple of years, and ask yourself, particularly if your sales are growing, if we do nothing and if the current trend continues, what will happen? Because if the days of receivables are lengthening and your sales are growing, guess what? You're going to have exponential growth in the working capital invested in receivables. Do you have enough working capital in the company to support that? Well, maybe you do, maybe you don't. But the fact of the matter is that if you follow the principles that we've laid out, you won't need to do that. You can identify carefully the way to understand why you're being paid late, and progressively alter the way that you work with customers so that they start to respect the terms that you've agreed, and you gently and lovingly engage with them to ensure that the opportunities that they've used to pay you late are gone. Now, if you're in a hurry, and one of the main things about receivables is we find a lot of people that talk to us are talking to us because they're in trouble. Well, the good news is that at RIABU, we have a way of helping you quickly, and we'll talk about that a little bit later. But what this book is about, above all, is it's about recalibrating the way that you relate to your customers throughout your organization so that the question of late payment goes away and you become known as a high service, high touch organization, and that your customers pay you routinely on time. Finally, one of the things we've been doing in the lead up to the launch is going out and sharing the book with business leaders from all sorts of industries. On this slide, you can see bankers, you can see equipment manufacturers, publishers, senior executives from marine services companies, a furniture manufacturer, a restaurateurs. All of them agree that working capital is their primary concern, particularly given what's happened over the last year. And all of them who've given us really thorough feedback on the book. So do consider buying it. It's available in major bookshops in Singapore and on Amazon. And tell us how you get on.
Yes, amazon.sg, Let the Cash Flow is the name of the book, and it's in store now. A couple of reminders to please get your questions, comments, or observations in. Perhaps you have your own tale of woe about customers who haven't paid you on time. Please drop them into the Q&A function and we'll address them here in the next hour or so. The other thing to note, of course, certainly from my perspective as a communications consultant, is how much better this feels. And what I mean by that is that if you're a business owner or you're in the finance department, you know, chances are you're losing a lot of sleep over your payments. You're worrying about how you're going to pay your own staff, your own rent, your own overheads. And you know, the anger builds and the resentment builds that the very people who are there and who you are counting on to substantiate and support your livelihood through their custom are also the ones who are causing you the most grief. So given the fact that a lot of what Simon's talked about in the last hour, in the last 20 minutes, I should say, has been all about how to communicate to your customers, you can actually unravel a lot of that resentment that you end up feeling. And I guess that it also bears out, particularly looking at those happy faces just now in that slide deck, Simon, that a lot of this actually is about feeling better. Not just you with your customer, but also getting your customer to feel better about you. No customer is going to feel great about you when you keep calling them and harassing them for payment. You know that if you run a business and your supplier gives you an opportunity to hang on to your cash a bit longer, whether it's by not sending you an invoice, which is not unheard of, or by sending you an inaccurate invoice or sending it to the wrong place, you're going to be inclined, though you're a decent chap, you're going to be inclined to sit on your hands and quietly wait for things to evolve, okay? But the reality is that when that happens, you end up having a difficult conversation, which is a conversation after the invoice is already overdue, and it doesn't help the relationship. It's difficult. It's, well, you know, there's a sense of annoyance, of frustration there. We aim to help you take that out of your relationship cycle
by removing opportunities for these things to occur. So yes, it is about changing the nature of the relationship from one where you've got an adversarial discussion happening on the back because you try and collect the money that you should have been paid in the first place, and eliminate the reasons for being paid late so that you can have a upfront discussion about service.
Yes, and we are very happy to have you join us in this discussion. In fact, we have one contribution already. Thank you if you're the one who sent in this particular question. You wrote, sometimes I think some customers are behind on payments, but it's still manageable. What are the first warning signs a business owner should look out for? Good question. Simon, what's the answer?
Well, you know, it's interesting because one of the things that I would like to challenge, with the greatest respect, I understand exactly what you're saying. One of the things I would like to challenge is this. It's being paid on time is not, it is a binary question. In other words, if you have a date by which your invoice should be paid, you should be ruthless about sticking to that. I don't mean ruthless in the sense that you kind of go around there and get red in the face. I mean ruthless about insisting that that is a date which needs to be respected. You know, one of the things that I hear from a lot of businesses, well, you know, we allow them a couple of weeks. No, don't allow them a couple of weeks. Why? Because the customer's looking to see whether you take your terms seriously. What if you price your product at $100? I've got no idea what your product is, but let's say you price it at $100, and when it comes to payment, your customer sends you $96 and says, do you know what, I've thought about it, and actually I'm only going to pay you $96. You'd think he was nuts. Well, paying you later than the agreed terms is the same thing because it costs you money. It is a clear departure from what you've agreed. So in a gentle, loving way, I would advise that you stick firmly to whatever you agree in the first place and ensure that it is agreed before you even start transacting with that particular customer.
Yes, that's sometimes it might, again, feel odd to take that hard line. And I suspect on occasion it's because when we take off the supplier hat and put on the customer hat, we probably also look for those little, oh, you know, I'll just pay it after the weekend.
Well, you and I have had these, you know, because we're serial. Part of the reason that we wrote this book is because we're both sort of serial entrepreneurs. And I've started, I think, 7 companies in the 30 years I've been in Singapore. And Mark started at least 4 or 5, to my knowledge.
Some we haven't discovered yet.
Yes, some we don't talk about. But the reality is that it's quite true. What we're concerned with, even us, despite having created this wonderful recipe for getting paid on time, when it comes to starting a new company, what are your concerns? The overwhelming tendency is to be focused on the product, the customer, getting the revenue coming in. All of that's great. But the reality is that unless you drink the Kool-Aid right from the start and build payment expectations in a binary fashion into the way that you do business, you're going to find yourself before too long in a situation where payments are not under control. And here's the thing, and I'm addressing this, and there is a whole chapter on startups, because good luck if you're a startup, and if you're listening to this, well done, because the reality is it's a lot easier to get these things right from the start than it is to build a business and come back after 2 or 3 years and say, oops, my customers are paying me months late, I've got a huge pile of receivables that I'm owed, and try and correct that, because typically by then you've built up a culture and you've built up expectations, not just with your customers, but also with people within your own company, because you've got salesmen managing those accounts and they're saying, well, they paid us in 2 months late before, so I guess that's okay. So you need to set the right tone and you need to be binary about it.
It's interesting that you just called it a recipe. I don't think we've looked at it like that, but isn't it the same as being in the kitchen? You've got all of your ingredients laid out, and you'll just deviate from the recipe. It also means that the meal doesn't taste as good.
Or, you know, or you go to the fridge and eat a bar of chocolate instead, which is you know, certainly true of me. And what that means is that I'm saying to the customer, oh, never mind, you know, we get on so well, let's go and have a beer. Well, the reality is companies are going bust. They're going to go bust in record numbers, particularly SMEs, because there is an asymmetry between the way that big companies get paid and the way that small companies get paid, and it's simply to do with their power in the market. We have a white paper on this. You can find it if you go to the RIABU website, but the reality is what that shows quite clearly is that big companies are hanging on to their money more and more, and small companies are finding themselves getting paid slower and slower and slower.
And Mike joins the conversation. Thank you very much for your contribution here, Mike. Good to have you with us today. Simon, Mike writes, do you think it's possible to add an automatic interest charge on late payments? You know, the We'll add 2% per month to the bill type of.
Yeah, I mean, I remember when I was a very young man, I remember coming across almost my first client. This is in the
70s? Okay, maybe not quite that way.
Yeah, an invoice consisted of a stone tablet with no. They were being paid late, but not only were they being paid late, but they had charged late interest payments on a vast number of invoices, which also weren't being paid on time. What that did was it created a massive additional level of complexity. What I would say is this, and many clients say to me, oh, I know, we've solved this. We're going to give the customer a discount for paying us
early.
Well, early or even on time. But, you know, my response to that is, well, if you have an agreement about when you're supposed to be paid, why do you have to give the customer an additional discount to have them pay you on time? Each commercial situation is different, but the reality is it boils down to this. Are you or are you not serious about being paid on time? And are you prepared to back that up in conversations with your customer? Because the big difference between companies that get paid on time and companies that don't get paid on time, and this is something I learned decades ago when I did a survey in China of new entrants to the market, is that the relationship between companies that get paid on time and companies that don't get paid on time in China in the early 1990s, it wasn't whether the company was big or small, it was how seriously an individual company, however small, took its terms of trade from the get-go. So we had very big, powerful companies with substantial market shares who were being paid late, and we had small companies that had very little influence and were in fact new in the market who were being paid on time. What was the difference? The difference was the way that they manage their relationships with the customer. So every situation is different, but if you have a late payment situation, providing discounts or incentive is very likely to complicate your invoicing collections environment significantly. Particularly if you have a pile of overdue invoices, you're likely to end up with even more corrections that you need to make. And
yes,
I've very often seen situations where customers, because of the way big companies are organized in particular, where you have a procurement department and a payables department, if you offer them a discount for anything, they will always take the discount. But then the decisions that they make on when they pay the invoice, which is the payables department, are entirely divorced from whatever may or may not have been agreed in the pricing environment by procurement. So you'll very often find you'll just be paid at the same time anyway, but in effect, what you've done is given away margin. So forgive me, I'm a little bit hesitant to support the notion of offering further discounts or incentives. Keep it simple, be clear about what your terms are. You can have a discussion on what the most appropriate terms are, but once you've agreed them, stick to them.
Stick to them, yeah. Well, that brings me to this next question, where, again, anonymous, thank you for submitting this one.
Anonymous.
Yes, you wrote, is it possible to offend a customer if I am too pushy about my payments, especially if they are a regular customer? Is it wrong to be lenient with some customers and strict with others?
I think this is a really good question, and I addressed this early on in the book, you know, in reasons that you typically hear. The notion that by asking someone to stick to what they've agreed, you offend them, is a notion I would challenge very vigorously. But let me qualify that. If you've let things slide to the point where you are being paid late, well, something's happened. It's called custom and practice. That is, you thought your terms were 30 days, but you've allowed your customer to keep paying you in 60 or 70 days. There's an expectation then that's been created by you because you've let the customer pay you late. So that's going to be a tricky discussion to have. And you may find that you have to make some kind of a compromise. The way to avoid that is to be very clear in the first place what your terms are. And however sweet your customer and however much you want to keep that relationship going, stick to the terms. Because once you've let them slide, it's next to impossible to rewind them. What you've actually got to do in effect very often is to renegotiate your terms. So I absolutely understand, as does Mark, you know, because we are small business operators, how reluctantly you go to a customer and say, come on, you know, we've got an agreement. But the reality is you need to, because it's your life's blood and it's why companies go bust. And if you had an agreement and if they respect you, why should you not expect them to stick to it? Now, we put some practical suggestions in here as to how you can reel them in, as to how you can change their expectations show them that you're committed to building intimacy and service so as to make that an easier discussion to have. But should you let them get away with it because you like them or because you need them? Well, the trouble is that is going to take you in one direction, and that is it's going to take you in the direction of receivables going up and up and up and up and up and up. And many is the company that I've worked with that is in precisely that situation.
Well, inherent in that question is the concern that, you know, here you are trying to give lots of customer service, love your customer, right? Surround your customer, you know, all that mantra. And so on the one hand, it is about being of service, yes, loving your customer. But on the other hand, you're saying take a hard line, be uncompromising.
Well, I think, you know, there are, you know, again, this is in many ways a complex issue. And one of the big issues with this particular question is your commercial organization. When your salesmen, your marketing people, your account managers talk to customers, what are they saying about payment terms? You know, if you have a culture where you are being paid late, and if you've not put pressure particularly on your team to manage that better, then it's likely that they will have created a culture where the customer expects to be given concessions, and where quite often your commercial team may even use that as a way of maintaining their relationship. Oh, you know, I'll sort it out for you. Don't worry, a few days. Well, so one of the things that you'll need to do then, remember we talked a few minutes ago about taking the tone from the top. The owner of the company has to be prepared to walk the walk, okay? Then your commercial organization has to understand and practice good discipline when it comes to working capital. Understand is really important, because it's by no means evident that all salespeople, including the very gifted salespeople that probably bring in most of your sales, necessarily understand why working capital actually matters. So sometimes they may feel, well, I know the money's going to get paid because this is a big customer, so why all the fuss? Well, the reality is, when you get paid has a significant impact, not just on your profitability, but on your survival in some cases. So take the time, and one of the things we lay out in this book is the things that you should put into, and one of the things we do at RIABU is helping your sales team understand why working capital matters. It's very important that they do, particularly if you do what we advise and progressively start to include in their incentive structures prompt payment by their customers, particularly their bigger customers. And they're not going to be very happy if you try and do it and they don't really see what the reason for it is. They're very likely to, you know, I worked in organizations where the finance director who tried to reduce receivables was known, for example, as the customer prevention officer, because his, you know, and this goes back decades, but I hear this very regularly, which is, why are you trying to stop me growing the business? Well, I'm not trying to stop you growing the business. I'm just recognizing that if we go on giving unlimited credit to everybody, we're all going to, none of us are going to be able to pay our mortgages at the end of the month, right? So, you know, so it's important that you take the time to build an internal understanding of why working capital matters, and you provide your sales team with the right tools to be able to have conversations with customers, particularly if in the past they've said, oh, don't worry, I'll sort it out for you. Change those conversations, and that requires conceptual training, role play, and scripts. It's all in it.
And yes, a gentle reminder, Amazon.sg is the platform where you can order the book right now. And I sincerely hope you do. Maybe you'd like to order 5 copies and hand it to 4 friends who's currently facing cash flow difficulties. Reminder too to please click the Q&A button at the bottom of the Zoom screen and submit your questions, comments, or contributions. We frequently hear lots of horror stories about the sorts of issues that you might have in terms of getting paid on time. You can also listen to our podcast on Spotify, iTunes, or Podbean, where we cover off some of those stories. First, let's cover off some more questions, Simon. You ready for some of these?
I'll do my best, Mark.
I'm sure you will. Free advice from Simon Littlewood here today. What can be done if the discussion about payment window has gone? What can be done if the discussion about payment, all right, so presumably there is a window of time, and the work has either been executed or there has already been a set precedent, that custom and practice issue. What can you do to unwind that, or when it now feels inappropriate to raise payment terms?
Well, so the first question, and you know, it's kind of, this is quite an unhelpful answer. You know, it's when you're asking for directions and you lean out of the window and someone says, well, I wouldn't have started from here myself, you know, which isn't really very helpful. But the reality is, The question I ask when I hear you ask that question is, were the terms of revenue recognition and payment, because I think you're talking partly about revenue recognition. Revenue recognition, for those that don't know it, in some industries, there are quite specific criteria that need to be met before you could actually cut an invoice and send it to your customer. And one of the things that one of our referees said, I don't know, is it you, Bill? Are you listening? Was that he was managing a complex business which provided a mixture of hardware and services. And the salesman, his enthusiasm to close the deal on the golf course, for example, would say, yes, we can do this, yes, we can do that. But the contract, when it was actually written, was not specific enough about when things were delivered and when, as a consequence, invoices were triggered. So it's a revenue recognition. Unless you nail that in detail, and the devil is in the detail, and this is more true of some businesses than others, but there are many businesses that have quite complex service models, then of course you've created that any ambiguity, the more ambiguity there is in your order, delivery, billing, the more the customer will benefit, because any customer who's any good can manage ambiguity to his or her own benefit. So the first thing you need to do is to have a very disciplined order capture, contract definition, and billing capability, so that all the expectations are mutually clear and are put down in writing and agreed to, so that when you get to a point where someone says, well, I don't think you should have billed us, or we don't think you've delivered, you say, well, this is what we agreed. This is you agreeing that we've delivered it, and here's our invoice. That's a situation that you want to get to. So clarify expectations, clarify acceptance criteria, which is a mutually agreed process where if you have a complex mix, very typical of project environments, whether they're, engine environments or infrastructure environments or whatever it is, you need to be able to have a mutually satisfactory way of agreeing what has and has not been done. Acceptance criteria have been met, we're therefore billing you.
Okay, but I think the question is, what happens if it's already too late?
Did I answer the wrong question?
Yes, that's right. What happens if you have already got a customer? Like you said, custom and practice, you've been doing business for the last 3 years, and hey presto, they then say, why should I change now? I've been paying you for 90 days for the last 3 years. Well, why should it be 30 from here on in?
Very often you will come across situations where custom and practice has got to a point where people are paying you later. Well, the answer is you cannot successfully manage receivables unless you have a mutually agreed term of trade that you can measure by. And if you've allowed things to get to the point where whatever the original term was, the belief is now that it's much greater. And by the way, I've worked with big companies where there were 7 different perceptions for one customer about what the terms of trade are. I can tell you what they are. There's what's written in the computer, what the finance director says, what the salesman says, what the customer actually thinks, what's written on the invoice, and when they actually pay you. Well, that's only 6. Sorry, I'll try to remember what the other one is. But the point is, that's because nobody had really thought about it, and everyone kind of had a go, and the customer thought, well, this is good.
Yes. Divide and conquer.
The second they see 2 different numbers. So to answer your question specifically, you've got a situation where they're not paying you because something is not clear. Any program to improve receivables management, just stepping back a little bit and moving away from the one customer scenario, has to have 2 components. You have to be clearing up the old stuff where you've got disputes going on, and you need to put resources against that. But it's kind of like a wave. If you're allowing stuff that you're billing and delivering today to be delivered in the same atmosphere of ambiguity or lack of clarity, then you can expect to have disputes later. So you need to settle the old stuff that's in dispute, and you need to go back and you need to re-engineer your contract management terms agreement environment, starting with your bigger customers, always focused to value, so that these ambiguities and challenges are progressively removed. So, because otherwise all you're doing is you're fixing the airplane as you fly through the air, and you're constantly generating more problems at the front. So any internal program, we do talk about this at some length, has to have 2 components. Deal with the old stuff, but step back and start changing the environment right from the start of the customer relationship. Yeah.
Okay. Here is the book once again, and you can see it in the chat now here in the Zoom window that you're on. There are links that you can click in order to order your copy of Let the Cash Flow. Simon, are you ready for some more questions?
I don't know.
I think you will be. Thank you for submitting this one. You wrote, is it normal for clients to withhold payments while recontracting negotiations are going on for additional leverage? So in other words, it sounds like, if you were the one who wrote this question, it sounds like you've maybe had a 2-year term, you're now recontracting, and the customer is withholding the last payment from the first contract before you're heading into the second contract. Am I getting it right? How do you avoid those situations, Simon?
As to whether it's normal, I mean, I can't really opine. I mean, if you're letting it happen, then it's normal.
Right. But how to not let it happen? Because you want to roll over into the next contract.
You know, I think we all know there are a number of ways in which a customer can use the expectation, or client can use the expectation of future business to mess you around on the terms of a current contract. And I've been caught out myself numerous
I think we all
times.
live in hope.
I mean,
right?
You know, a very obvious one is they say, well, if you give me a bit of a discount, I'll give you, you know, get more business. And then you give them more business. They say, well, if you give me a bit of a discount, I go, so, well, hang on a minute. I gave you the discount on the first piece so that we get, you know, so the answer is you've got to use your commercial judgment, and you've got to set things up right in the first place. One of the things that you'll learn is that by looking at the things that have occurred in the past, i.e. what brought you to this situation where this customer is making this demand, you go back and you fix it, so that when you do that first contract, you specifically address this issue, that the settlement of the terms under this contract have no bearing on any future work. You know, you do want to work with them and you'll do your very best, but the fact of the matter is that a contract is a contract, and here are the terms and we expect them to be met. I know that's hard in a commercial environment, but the more you clarify it at the beginning, in writing and verbally to the customer, the easier it's going to be for you to deal with it. And the sad thing is that once you allow this to happen, of course, it's only going to get worse, because what it does is it creates an environment where the customer can constantly hold out the prospect of future work and extract all sorts of concessions from me. Mark's nodding at me because we've both
stringing along, right?
Yeah. Well, it's give me a discount, give me longer payment terms, give me this extra service.
Yes,
it's you know, it is so. You've got to, however hungry you are, and God knows we've all been hungry. I know I don't look very hungry, but I have been hungry.
Yes,
is, you know, you need to define things. You can argue about what's appropriate until the moment where you actually sign the contract, but you need to make absolutely clear that the terms that are in the contract relate to that contract and need to be met. You know, and again, we write about some specific things that you need to do. I mean, you know, a very common thing is, even if you agree the terms, that you kind of, the detailed terms at the back of the contract, you don't go through with the customer, you just kind of leave them there. And when these issues arise, I say, well, I never read that. Well, it's the onus is on you to make sure that you do go through those terms and you get the explicit agreement of the customer. Hard to do that. You want the business, you're eager to get started. Resist the urge to skim over critical terms. Insist that you sit down with the customer and go through the most critical ones, item by item. I know it's counterintuitive, but believe me, it's worth it.
Yes.
Because you look them in the eye and they agree.
Yes. Why is the fine print in fine print anyway? Shouldn't it be in big bold letters instead?
Yes, I mean, there's just a limit to how many bold letters there is room for on the page. And the reality is that our focus tends to be on what it is we're going to deliver and how much we're going to get paid. And you'll very often find yourself, if you haven't made space for talking about the other stuff in terms of time and focus, which means you have to call it out right from the beginning, you'll find that space has run out because the customer doesn't want to do it.
Yes.
In fact, you and I have had conversations about customers who deliberately occupy you with certain issues in order to avoid getting to the crunchy issues of when they're going to pay you.
Yes.
You know, big companies in particular are adept at making you feel loved and valued, whilst actually avoiding telling you the things that you need to know in order to get them to pay you on time.
Yes.
So be persistent.
Yes. Yes. I remember a particular client conversation sitting around, 3 on their side plus me. So the 4 of us in a room, and they said, okay, so we've talked about the service, we've talked about the dates of delivery, et cetera, et cetera. Is there anything else you need to know? And I said, well, of course, I need to have the purchase order. And then they all kind of looked at each other and they had this knowing smirk on their face as if to say, oh, damn, we've been caught out.
They were buttering you. I mean, they've developed an internal culture where by dealing with you in a particular kind of way, they created a window to hold on to the money even longer because it's a large organization and you can't get paid at all.
Yes.
You can't create any kind of transaction unless you have a purchase order.
Yes.
Yeah.
So Let the Cash Flow is the book, but there are two other things which I said at the beginning of our official launch today that we will walk you through. And that is first, how to put this book into practice. So first of all, of course, you've got to read it. But how do you make sure that you hold yourself to the things that Simon and I talk about in the book, such as the fine print, right? We were just talking about the fine print and having, for example, a credit policy, a document which doesn't need to be 30 pages, can, if you use the credit policy generator on RIABU.com's website, can be as simple as 2 or 3 pages in plain English, very easy for everyone to understand, unambiguous. And so the place to generate this credit policy among a variety of other tools, you go to RIABU.com. This is the portal that's appearing here in the screen share. And what you'll see, at least here from the opening page, as it were, is the tips and tools for getting paid on time by your customers. Now, what you're seeing in this portal is a dashboard, for example, which allows you to keep track of who you have to call when, critically important, critically important. Don't leave it for you to kind of schedule in the calendar, because what's the bet that you'll make excuses on behalf of your customers to not call them and not check that the invoice has arrived. But the RIABU.com platform also allows you to keep track of exactly what the terms are. You mentioned, was it 6, was it 7, was it 8? Different, expectations or theories of what the payment terms are. RIABU.com holds you to it and shares that information, not only with other members of the team, so that everybody knows that it's 30 days or 45 days, but also with other members of the RIABU platform, so that if you submit information about the particular payment quirks, payment processes that you've experienced with customer X, well, other suppliers to customer X will also be better off. Other suppliers to customer X will also be better off for that knowledge. So RIABU.com is the platform. You can see it here in the screen share, and I'd encourage you to also visit that and sign up so that you're turning the recipe. In a sense, it's the kitchen where you can apply the recipe. Simon, any additional points you want to add?
No, there's nothing conceptually complicated about getting paid on time. What you're going to have to confront is habit and behavior, and very often it'll be your habit and behavior. There'll be things that you'll need to do to set things up right with your customer that probably you're not comfortable doing and haven't done before. They won't be difficult in the sense that the content is difficult, but they might be tough. And they're things that if you don't do them will simply leave the door open for late payment. And one of the things that RIABU does, and RIABU, we haven't talked about what RIABU means, but RIABU means, can I talk about that? RIABU means, named by my daughter when we were trying to think about what to call the company. She's an expert in ancient Middle Eastern languages. RIABU means fairness in a language called Akkadian, which is the lingua franca of the Middle East about 4,000 years ago. And fairness, particularly for small and medium-sized enterprises. As I talked about briefly at the beginning, it's very clear that there is an asymmetrical relationship between large and small companies. Over time, everywhere in the world, small companies are getting paid more slowly and big companies are getting much better at hanging on to the cash, however much they may claim to care about small companies. Why is that important? Small companies, SMEs, defined as $100 million or lower, I think currently employ 51% of employees in Singapore.
70.
I beg your pardon.
7 out of 10.
7 out of 10 employees in Singapore, and it's a similar number around the world. It's a similar number even in the USA, for example. So systematically depriving SMEs of cash is a huge issue. What RIABU's platform, RIABU meaning fairness is whatever I agree with you, you'll stick to it. But the reality is that we now have a situation where whatever I agree with, if you're bigger than me, you're going to take liberties. Okay, so yes. What this book does is it says, here are the things that big companies typically do in order to take liberties. They don't just say, well, I'm not going to pay you, I don't care about you, because they have this way of projecting a image, a positive image. So they have to find ways to constructively pay you late. And very often they employ consultants like me to help them understand how they can remain okay with their own consciences, but still pay you late. And that involves the kind of things that Mark just described, where they put wrinkles and deliberate complexities into their procurement and payment processes. Yeah, and they do it all the time. Yeah,
this is actually the beauty of the book, because Simon is a hacker in a sense who's turned good and is now providing us the key to unlock a variety of the processes and the wrinkles that companies put in.
Yes, I mean, I generally have not advised clients to pay their suppliers late in order to generate cash, because why would you pay for that kind of advice? It's rather obvious and not very good. I mean, generally, I would argue, stick to what you agree with, what you agree to, whether it's paying customers or getting paid by your customers. But you have to behave in such a way that you actually mean it, and that you do not leave the door open for things to go wrong. And one of the other things that we talk about is it's getting very easy, because the things that I'm describing, as you've probably seen, require that you maybe make some changes in your behavior that you're not comfortable with if you're leading a company, or you maybe have to do some things with your sales team who might be very successful in growing the business, which is going to challenge some of the ways that they're used to behaving. And all of those things are slightly difficult. But the reality is, if you don't do them, the situation will not change.
Okay, so let's, before we take the final round of questions, and once again, final call to drop your question into the Q&A function here in Zoom. We also want to show you Pledge to Pay. So as Simon alluded to a few moments ago, the fact of the matter is that a lot of companies do feel good about themselves, right? They have processes which don't make it easy for their SME suppliers, but they can feel good about themselves. They can sleep easy at night. Well, Pledge to Pay is designed to make them sleep even easier, because what we're calling on large companies to do, in fact, companies of any size to do, is to, as the name says, pledge to pay their SME suppliers within 30 days. Now, you can see that when we started this movement in Singapore last year, we already secured quite a lot of large organizations that were the friends of the SMEs, and they pledged to pay their SME suppliers during COVID within 30 days. I'd have to say as well, Simon, that we actually had a few companies that were a bit reluctant about putting their logo on the website, but it still made the commitment to pledge to pay within 30 days. And in some instances, being a supplier to them ourselves, we knew that they were actually sticking to that commitment. So we're calling on companies all over the world at pledgetopay.com to do the right thing by SMEs. We're not asking you to buy any more. We're not asking you to pay larger amounts. All we're asking you to pledge is to pay your SME suppliers within 30 days for products and services that you are procuring anyway. So that, as Simon was saying earlier, you can, that is the SMEs, are able to afford to keep their shops open, to keep the lights on, as it were. You also need to realize that because many business owners are so invested, personally invested in the SMEs, in the companies that they've founded, that very often when a large company doesn't pay, it results in some very direct and very personal issues for the business owner. You know, whether you're able to send your son to football camps or your daughter to ballet classes or vice versa, the fact of the matter is that the business owner is not able to do that often, precisely because they're waiting for a very large customer to pay. So if you want young boys, girls, young men, young women to have the benefit of an education, have the benefit of going to extracurricular activities, having the benefit in some cases just to buy school books, can you please pay their parents who are running SMEs within 30 days? Pledge to Pay, though, has two other aspects, because we realize that it's not just the customers who are at fault of late payments, right? Simon's made this point repeatedly over the last 45 minutes. Very often when you don't get paid on time, it's your own fault. I know that's hard to stomach, but it's true, right? You've missed out certain elements in the invoice. Maybe the invoice didn't get sent to the right person, and so on. So among the two other things that we're inviting you to do on Pledge to Pay is to give kudos to those companies that already pay you in 30 days. Companies are all looking to try to boost their sustainability standing. They all have CSR initiatives. They're all shouting loudly about ESG, environmental, social, and governance issues. Well, give kudos for those companies that are already paying you within 30 days. And the third element in Pledge to Pay is to call on companies to pledge. So if they're not stepping up voluntarily to pledge to pay within 30 days, maybe you'd like to put their name on a list anonymously, and we will do the chasing for you. PledgeToPay.com is now live. We welcome you to pledge to pay your own suppliers within 30 days. Give kudos to your customers who do, and call upon those customers who don't yet pledge to pay. So we hope, obviously, that you will join us in this global movement. Any reflections before we take our final round of questions through Q&A here on Zoom?
Well, I don't, thing to understand about SMEs in Singapore, mostly if you're an SME and you want to secure borrowing, you have to give a personal guarantee or somebody close to you. I mentioned earlier that SMEs are likely to go bust at a record rate this year. Well, guess what? A majority of SMEs have their borrowing secured on the primary residence of the owner of the company or a near relative. So the impact on SMEs, apart from not being able to pay for their children's education, is fairly catastrophic. So it's time for big companies to do the right thing. The fact of the matter is that when they're under pressure, because big companies are seeing reductions in sales as well because of COVID, it's too easy to withhold payments from small companies who can't do anything about it. If you're a big company, find another way to repair your balance sheet and do the right thing by small companies. It's an existential issue for many small businesses in Singapore and the region.
Yes. All right. So let's take your questions. Once again, get them in and we will answer them in the next 10 minutes or so. Thank you for submitting this one. You wrote, if I have a customer who's always late, should I, as the business owner, get involved, or should I leave that to my finance guys?
Well, I think that as a business owner, you should always be ready to get involved. And in fact, if you read the book, you'll find that one of the referees who writes a fairly lengthy attestation about how he put these principles to work, he was already running a business that I think had $400 or $500 million in sales. That business now is worth more than $5 billion in sales. And he recognized that he needed to be ready to go and talk to the customer. I think that if you do talk to the customer, and it doesn't have to be adversarial, it could be gentle and loving, because one of the things that referee mentions is that when he went to his equivalent at the customer, that his equivalent had no idea that he was being paid late, because if it's somebody senior, they may not know. In many companies, decisions about when invoices get paid and the people who do the procurement of the goods and services, these decisions may well be taken behind Chinese walls in two different parts of the company. The bigger the company, the more likely that is to be true. So I have to say, yes, if you're the leader, be prepared to go in and have that discussion. I think it's very important. It's important that your customer sees that you care, that it matters to you. I would say something else, and again, we talk about this in the book. When you go and see them, don't go to see them on the basis that they're doing something wrong. Go to see them on the basis that you want to understand what it is that you've done that would cause them to pay you late. And it might sound like a minor distinction, but it's not.
Yes, it's much less adversarial to go in and say, what have I done wrong?
There must be, what is it? Well, it might be. On the other hand, in quite a significant percentage of cases, you might get a list of things that you can do better, very commonly. And that's actually not a bad thing to have.
Yes.
And by taking that list seriously, you might find that you can rectify that payment situation. So lead from the top. You've probably got lots of better things to do. But the reality is that's what makes a difference.
Okay, a couple more questions. Is the book suitable for companies of all sizes or just SMEs?
Yes, I think it is. I mean, most of the stuff in here I learned from quite substantial engagements. On the other hand, as we mentioned several times, I'm a serial entrepreneur, as is Mark. So we've got direct experience of the SME environment. One of the things we tried to do in here is separate. Broad principles are the same. Clearly, for SMEs, things are a little bit leaner, and we've therefore put in a separate checklist for SMEs. And as far as RIABU is concerned, and our website, we've created a special channel for SMEs and for startups so that you can go in and have a lean down version of what you need to do. big companies may have more time and deeper pockets, but the reality is the existential issue might be more pressing if you're a small company. And certainly the principles in here apply to big companies as they do to small. Yeah.
Yes, and part of the reason why we wrote the book in the format that it is, you can see it's actually quite thin. This is not an academic accounting tome. It is very much a how-to guide. And you saw earlier on in the variety of graphics that Simon was flashing up in the presentation, they all had numbers, figure numbers, which were out of order. In case if you notice that, you'll know that actually those were graphics
from the book, yeah,
directly taken from the book. So you'd be able to cross-reference that back. It's a breezy read. There is no convoluted English. There is no convoluted accounting speak or jargon or lingo. Because
careful, we might be talking to a lot of accountants.
Because, well, but as the accountants well know, at the end of the day, it's really just about adding things up in the right way, because it is really a communications issue rather than a maths issue.
Well, it's interesting because, you know, when you breach the topic of receivables, very often what you get is a compliance and risk discussion. So depending on where you are in the organization, the finance department might view it as an exposure issue, which is, you know, if I manage risk correctly, what should my bad debt provision be, and so on and so forth. A curious fact is we did take a little look at other books that claim to address this issue. The first one I looked at was, I think, 900 pages long, and it had endless information about, you know, dealing with bad debts and reconciling balance sheets and all this kind of thing. Very much a specialist tome for financial accountants, and that's great. All of that's really great, but the fact of the matter is getting paid on time, this existential issue that's going to become even more of an existential issue this year if you're in Southeast Asia, is something that involves the whole organization. And it needs to be articulated in terms that everyone can understand. And it needs to be driven by a shared perspective coming from the top on what's important, i.e. it's not just revenue, it's not just product, it's ensuring that we get paid on time and that the money's in the bank when it should be.
And one more question, final call. If you have a question, please ask it. Hi, Peter. Thank you for submitting this one. Peter, you've written, do you see payment terms changing across the various markets? Longer or shorter? Payment in advance? What have you seen, Simon?
It depends. Yeah, it depends what you mean by terms. I mean, are people getting paid later? Yes, they are. I mean, watch this space, because one of the things that we're about to publish on our website is a benchmark of 2,500 Singaporean companies, varying from very small to 100 plus $100 million in turnover, where we will be able to tell you how average DSO is an average measure of when you get paid. I'm sure most of you know that, day sales outstanding, how that has evolved between this year and last year. And we expect to see substantial lengthening of terms for many industries. And if you're in, say, the marine services industry, I don't know, is it you, Peter? You will have noticed that terms probably are getting longer. One thing I try not to do is to tell you categorically what your terms should be. You should look at your industry, and RIABU, we can tell you what your competitors are offering in terms of terms, and you should agree a term that works for you, i.e. is consistent with the availability of working capital, and which, if you stick to it, will enable you to grow without running out of money. And you should ensure that that's built into your customer interactions. It's less important to worry about the actual term and more important to worry about how you manage to that term. And that's something that many companies get wrong. They obsess about what they call their term, and yet when you actually look at the payment performance of their customers, the two things bear no resemblance at all. Yeah. The key thing is to fix on a term and so manage things that that term is taken seriously by all your customers and all of your internal commercial and technical people right from the get-go.
Yes.
Can be a challenge depending on where you come from culturally, but it's critical.
Indeed, figures by Atradius, the collections and credit insurance companies, indicated that the payment terms have lengthened from 29 days pre-COVID, 2019, to 39 days in 2020.
That's aggregate across multiple industries.
And that's the point, right? It's aggregate. And so, to be frank, I don't recognize 29 or 39. I mean, in many industries, it would be far, far longer than that. The problem that you have in looking at these statistics is that you might be looking at the aggregate, you might be looking at a benchmark, which, as Simon was just saying, bears absolutely no resemblance to your own experience. And yet it's actually very interesting to see how your competitors are doing. You know, if you're all supplying to the same customer, maybe if you're in marine services, oil and gas, right? Maybe you're supplying the big oil companies. Maybe you're a tugboat operator, let's say. There are 3 or 4 tugboat operators. Do they all get paid the same? Would you like to know when the other tugboat operators are getting paid? And more importantly, if you find out that you're actually getting paid much later than other tugboat operators supplying the same services to an oil major, you've got to ask yourself why. And the RIABU website allows you to benchmark in such a way so that you know whether you're getting paid faster or slower than your competitors.
So this book tells you how to eliminate overdue payments and change the dynamic of your customer relationship so that they take your terms seriously and you get paid on time. But if you decide you want to improve things and you want to find out how well you could be doing by comparing yourself with the best performance among your competitors, then RIABU can tell you that as well, because we've taken all your competitors and we've arranged them in a benchmark so we know who gets paid the fastest and who gets paid the slowest. And we can put you into that benchmark and tell you what the cash and DSO benefits would be if you were to move up a quartile or become best of breed. One of the benefits of doing that is you can't argue that there's something in the external environment that makes that impossible if other companies that are providing essentially the same products can do it. That means it's doable. So that's one of the things that we offer. It's useful to have a specific number in mind when you start to improve things internally. So do reach out to us for that. Yeah.
Yes. And we always talk about getting paid on time. We're also going to finish on time with our official launch of Let the Cash Flow, the book. Publisher, Marshall Cavendish. The link to the Go Guru site and Amazon.sg is here in the chat in this Zoom call. And I've also put in the links to RIABU.com and pledgetopay.com for you to also check those sites out. Pledge to pay, sign up for RIABU, and join us in our movement as we call for an end to payment delays, stick to terms, and get paid on time. On behalf of Simon Littlewood, thank you again for joining us for the last hour, and keep in touch. Let us know how you are going with your payment terms. You can also follow the RIABU podcast on Spotify, iTunes, and Podbean. And of course, we're always very happy to hear from you with your own stories or perhaps other concerns or questions that you have. service@riabu.com. Thank you very much again for watching. Thank you, Simon. All the best.
Thank you.